let me set the stage for today's episode. This isn't a surface level conversation. We're getting into real world insights, what works, what doesn't, and how to apply what you hear today in a practical way, whether you're building a business, a brand, or your next opportunity. I want you to stay with me until the very end because I'm offering a free bonus specifically for listeners who finish the episode. Something that can help you skip the line and move faster if being on this show is something you've been thinking about. All right, let's get into today's conversation. Welcome to another episode of the Financial Freedom Podcast. Today's episode is sponsored by Aspen Funds. Bob Fraser. We're going to talk about the secrets of the ultra wealthy and the rich, what he does, how he helps high net worth, high income investors. Bob, welcome.
Fun to be here.
You have a podcast, Invest Like a Billionaire. Your son was on the show a couple of years ago. Talk about yourself and what you do for clients.
Yeah, I'm the CFO of Aspen Funds and chief macro strategist. We look at the big mega trends. What are the big trends that we should put money behind? The kind of things that hedge funds are putting money behind. And we do it for retail accredited investors. We construct the best strategies and the best investments to maximize those trends. We have 4 verticals we focus on based on big trends. The first is private credit. This is very important. In the public markets, it's difficult to get income. If you have money and you're trying to earn double-digit returns in cash, it's difficult in public markets without having an incredible amount of volatility. Private markets, it's very achievable. We have 2 private credit funds that do lending against real estate. These are secured funds. One pays 9%, the other pays around 11, 12%. Those are fantastic and fairly safe. It's not equity, it's debt products, and it's much safer and gets you current income. For example, somebody who's trying to retire that needs income. We love industrial real estate based on the big reshoring trends. As you're aware, a lot of companies are wanting to move back to the United States. They're moving manufacturing, moving their supply chains back. It's called nearshoring and reshoring. It's a massive trend. Just at the very beginning, only early adopters have been doing it. It's complicated, difficult process. What do they need? They need real estate. We're building industrial real estate in the heartland. These are simple builds, large, and they work for storage, logistics, and manufacturing. We're making fantastic returns for our investors, building up and down the I-35 corridor and industrial markets. We love that. We believe it's time for multifamily. We've not been that active in the multifamily market, letting the correction happen, but all the fundamentals are saying it's time to back up the truck. We have a unique multifamily product that we're getting ready to launch here this year. It's going to be a multi-asset fund. Very tax efficient. If you're looking for growth, it's a growth fund. The idea is we'll price it every quarter. You can declare redemption on an annual basis. It's got some liquidity provisions that you can experience the growth of this portfolio and pay taxes when you're ready and you want out. You can put money in when you want it, but you take money out when you want to pay taxes only when you take the money out is the design. We worked hard on getting all the auditors excited about this.
I recently read a book by Tony Robbins is talking about the holy grail investing, interviewing the world's greatest investors. Private credit was one of those areas. It seems like a gatekeeper. You have to be accredited. There's holding periods, minimum net worth, income. How can people get involved if they're not accredited or don't qualify?
There's nothing you can do. This is SEC laws. We're not going to violate those. You have to be an accredited investor. This means $200,000 a year in income, and you expect to make the same this year, $300,000 jointly with your spouse, or you have $1 million net worth excluding your primary residence. So that's the criteria. The laws beyond that, you need to look at active investments if you're not accredited.
You were talking about the mega trends. What are the top mega trends you are focusing on in 2026, the near future and far future?
There's a lot of mega trends we're paying attention to. First and foremost is the nearshoring and reshoring trends. We are building industrial real estate to service the move back to America. What that trend does is it gives us a lot of margin. We're building at an 8 to 9% yield to cost, which is a financial metric that says how cheaply we can build these things. And then we're selling them at a 6% NOI range, cap rate. There's a lot of money to be made. That's a big trend we're paying a lot of attention to. Another is oil and gas. We're seeing oil pricing around $50 a barrel. In the last 10 years, oil and gas exploration development funding has dropped by about 55%, meaning there's less dollars going into exploration and production, almost half. Why that matters is that a typical oil field has between a 5 and a 7% annual decline in production. Unless you replace that with exploration and development, you will see declining production. That is what's happening. The world is setting itself up for a very big oil crisis, energy crisis. It's not going to be this year, probably not next year. We still have a surplus right now, but we're going to see an energy crisis. What we're doing right now is buying producing oil fields and getting great yields. We're buying these at a 20% yield, including the decline curve at $50 oil. Well, the downside is baked in. Getting 20% returns is not bad. If the oil price goes up, it's lights out returns. That's the investment we love. If we're wrong, we still do well and we make money. If we're right, we make lots of money. Oil and gas is a fantastic investment. These assets are way underpriced. Prices are down 60% from just prior to the great financial crisis. Producing oil field, if they're on sale because of a flawed narrative that the world is post-fossil fuels. We are not post-fossil fuels. I wish we were, but we are not. We need fossil fuels to get us to where we have to go. Those are the kind of things we're looking for, narrative-driven false narratives that create opportunities. We're also investing in buying producing oil fields and operated by public majors. There's really no geology, engineering, operating risk. You're taking commodity price risk. The risk is that the oil price crashes. That's the risk we're taking. That's a risk I'm happy to take, the returns I'm getting.
Since we're on the subject of oil, Trump last year signed into a law a lot of efforts and focus into developing the nuclear portion because of AI and data centers. Where does nuclear come into play in this energy picture? How should people be approaching nuclear as an investment?
Like nuclear fusion, there's jokes about it. It's going to change the world as soon as it's here. It's almost here. It was 10 years out and it was 20, 30, and 40 years ago. Now, we're not talking about fusion. We're talking about fission, which is much more doable. It still is not a quick fix. I'm very pro nuclear. I think it's a great answer to burning fossil fuels forever and ever. It is fine and it's safe if done right. There's lots of new technologies out there, small modular reactors. The problem is they're not fully baked yet. They're not ready for prime time, certainly not ready to be licensed and permitted right now. If they are, it's going to take years, possibly decades for them to happen. I am hopeful that the bureaucracies can get out of the way and those things can proceed. The good news is the green people are backing that as well as conservatives. There's reasons to back it and people are not necessarily opposed anymore. So I think it's possible. But the Nuclear Regulatory Commission, their job for the last 40 years has been to say no. They haven't permitted anything. Well, they've got to be retrained. Can regulators be retrained to say yes? Possibly. The technology certainly exists, but it isn't really mature yet. There's a lot of competing ideas. Bottom line is it's not a quick fix. The only solution for data center energy is natural gas right now. You can buy natural gas turbines, full cycle turbines. They're extremely efficient, cheap, easy to bring online, easy to spin up, easy to spin down. When you need power, you turn them on, they generate enormous electricity. So the answer in the short term is natural gas.
Where does gold, silver, and oil play in this? These have geopolitical implications. Is silver in a bubble?
Without a doubt. Give me a break. I've been a metals investor since the 80s, buying and selling gold and silver over the years. Gold and silver, what a run they've had, but they're heartbreakers if you go to the mat for those things. The problem with gold and silver as investments, they're really not investments. If you buy apartment complex, it has a yield, it earns something. If you invest money, that investment can earn something. With gold and silver, they don't earn anything. There's a negative yield. It doesn't cost anything to short these. These things will always break your heart and you'll see crashes regularly. Things run up, but then they also go down.
Quick pause here, because if this conversation is resonating with you, you'll want to stay until the very end. At the end of this episode, I'm giving listeners who finish priority access and the ability to skip the line if being a guest on this show is something you've been considering right now. No action needed. I'll share exactly how it works at the end of the episode. All right, let's get back to the conversation. We're having technical issues. We're on the subject of silver. At that time, silver was above 100 trading. That was 2 weeks ago. What do you think is going on with silver now, Bob?
I called it both gold and silver. At the top, I said, get out, sell everything. Turned out to be good advice. I've been a gold and silver investor for 40 years. It's not like other investments. When you buy a share of Apple, you're buying a company that produces earnings. When you buy gold, you're buying something that doesn't produce anything. It has very little utility, almost zero. Silver has some industrial use, but not much. It's way more supply. So supply not only comes out of the ground, it comes from recycling. People recycle their silver. It has all this hidden supply. It's got no real utility or demand. And then you've got structural issues like producer forward selling. So anytime a miner, a gold miner company borrows money from a bank to mine silver or gold, the bank requires them to sell forward their output. So you'll sell your 2026, 2027, and 2028 output into the market, pre-sell it. And that way you get your price, right? And you reduce risk. But what brings all potential supply forward, you're creating a huge short interest. You also have the yen carry trade. So people borrow in yen and they short the market. And you have all these structural issues that create problems. The bottom line is gold has popped twice in the past, 2 times. One was in 1980. It went up hockey stick curve. It dropped 3 times over the next 19 years. It never reached that high again for 19 years and went down for 19 years, hitting 3 new lows, 66% losses, 68% losses, and 71% losses for 19 years. You'd be a corpse by the end of that. You're emaciated, walking zombie after dealing with that. Did it again in 2011, had another hockey stick run up, and then dropped over the next 5 years, dropped 45%. The bottom line is it'll break your heart. The people hyping it are people selling it, people selling protection packages from the dollar crash. You need hard money. Please don't listen to this. It's a ticket on the poverty train. Do not buy this ticket. Gold and silver, I like to look at it, collect coins as an investment. If it pops, get out. Why does it pop? It's pure cycles. 19 years of grinding losses. Well, who's left? Only the diehard believe. There's no one left to sell. So when there's no one left to sell, any buyer pops the market. At the top, when everybody's bullish, who's left to buy? It's a lot of sentiment analysis and analytics, is my opinion. There you have it. The ultimate smackdown of gold and silver. I hope people got out, is all I got to say.
The next question crashed, I think, 30% or so on this news of the new Warsh Fed chair. In the short term, what are your thoughts on people wanting to trade the cycle? Do you think it'll go back up or stay here or go down further?
Oh, I think it's going to grind down. It'll bounce, grind more, bounce, and grind more down. It'll turn you into a zombie. Get out.
Our earlier interview was late January, and all this happened. Fed Chair Powell, he made all these comments to spook the market, kept the rates the same. Following that, you had the announcement of the new Fed chair. All of a sudden, all the markets just tanked. Where are we in this cycle? What are your thoughts on the new Fed chair? How is he going to be approaching liquidity, interest rates, and how is that going to be beneficial or bad for real estate and investments?
Great question. He's freshly minted. Everybody's trying to answer that question. Where is he going to land? My guess is he's more dovish because Trump picked him. If he's dovish, then why would the markets crash? The markets are manic and depressive. All they need is something to trigger a gasp. It's why I like private alternatives. Public markets are nuts. Half the time they do things that make no sense fundamentally. The crash probably has less to do with the Fed chair and more to do with just people are worried about the extended valuations. Valuations are incredibly high right now. Market has had 3 of the best years in history. We've only seen the market go up 80+% over 3 years, 4 times in 100 years. Markets are extremely overextended. The chances that it does a fourth or a fifth year, same kind of level, is pretty low. It could. I can't tell you how high a tree can grow, but it's very extended. Investors have reason to be nervous. Then look at its massive expenditures coming out because of AI spend is nuts. Are they ever going to recoup this? Markets are skeptical. They should be. I think that's more to do with the market crash. To answer your question, I think we're going to see higher GDP growth. Analysts are predicting 2% growth this year. I think it's going to be higher. We did an economic summit at 3 leading economists on. My view is we're going to see higher, and I think we're going to be deeper Fed cuts. Right now, the market's predicting 1 to 2 by the end of the year. I think it's going to be 3 or 4 because I think we're going to see energy continue to drop. That relieves inflation pressure, high growth, weakness in job markets. So all those things mean I think the Fed's going to get comfortable cutting deeper. Well, that's good for investments. Will that spark real estate? The problem is you're seeing the Fed rate going down. You're seeing the futures curve dropping, but the 10-year, it's going up. So they're going different directions. It means investors are not ready. We're not going to see lower rates. The rate that most investments go off is the 10-year, not the Fed funds rate. Unless you're a bank and get access to all that cheap money, but not the way the world works.
And no discussion around investments would be complete without talking about Bitcoin. What are your thoughts on Bitcoin? I know it's been around since 2009 and had multiple near-death moments. Last week was down to 60K. What are your thoughts as a liquidity or a geopolitical hedge? It fits into gold, silver, tech, all of this.
Digital gold is the way I look at it. It has a lot of advantages over gold. It doesn't have negative yield. Gold, you have to pay someone to hold your gold for you. Investments should pay you, not the other way around. And Bitcoin doesn't have that problem. In my book, it's one of the only investable cryptos. I believe it is investable. Simply, it's got a 21 million Bitcoin cap programmed in. Is it ever going to be a global payment system? Absolutely not. No, it's not possible. Only less than 10 transactions per second can be processed in Bitcoin. The Visa network can process 6,000 per second. The utility Bitcoin has is if you're a terrorist trying to evade sanctions, or you're in China dealing with capital controls, then it makes a lot of sense to avoid overreaching governments. I think it makes sense to have a little bit of it, but this is a lesson in risk. The volatility is insane. It is insane. You cannot put all your wealth in something like Bitcoin. You just can't. The most important factor in making money in investments is not losing money. Warren Buffett called it the first rule of investing is not losing money. The second rule is not forgetting the first lesson. That kind of volatility is nuts. You can't survive it. The answer is you can't own a lot of it. You've got to have other things. I own a little Bitcoin. It's investable. I think it's going to go up long term. I think it's a great long-term investment. It's probably a good buy right now. Definitely when it sells off, a good time to accumulate.
Where are we going with real estate? Is it going to be a tough market like the past 3 or 4 years or better? Curious to hear your thoughts.
Definitely better. I called last week in our economic summit, I called the bottom in industrial, retail, and multifamily real estate. That's my personal opinion. I'm no guru, but that's where my firm is placing our money, what I firmly believe. I did successfully call the bottom of the housing market in spring 2013. I've been lucky a few times. I think I'll be lucky again. I think it's a good time for selective opportunities. There's pain in the multifamily market, but it is only the oversupplied markets. But these are also the high growth markets. So it's a good time to start placing capital. But I also prefer other real estate investments. I think it's a good time for industrial. We have a successful industrial fund. Industrial doesn't have the same overhang that multifamily has, doesn't have the same oversupply issues. It never really crashed. Industrial has got an incredible demand driver called reshoring and nearshoring. Manufacturing is moving back and supply chains are being re-engineered to be shorter and less risky. That involves real estate. So we're developing a big box industrial real estate across the Midwest. That's a great investment. Investors are underinvested outside of multifamily. When the market slaps you in the face, like multifamily, learn from it and figure, okay, multifamily is good, but let's not just do multifamily. Let's spread things around a little bit. Hopefully investors will diversify out of what they've done in the past and what they're most familiar with.
How can people connect with you, check out your podcast, and learn more?
I wrote a book last year called Invest Like a Billionaire, hit number 3 USA Today bestseller. I really encourage listeners to get it. I put my heart and soul into this book to help people be successful alt investors. I got creamed a couple times by the public markets. There's a lot of superiority in the private markets. They're very attractive in a lot of ways. There's disadvantages, but I go in detail how to approach the private markets, how to win in them, how the billionaires play the game. That book is available on Amazon. And you go to investlikeabillionaire.org, and there also is a portal for people looking to source private alts, meet other people who are investing in private alts. There's community. My firm is Aspen Funds.
Thanks for coming on, and we appreciate your patience with the technical difficulties. The audience appreciates your insights.
All the best for everyone 2026, and I'm looking for a good year.
If you stayed until the very end, congratulations. You've earned the freebie. As promised, here it is. Email chris@drchrislewmdphd.com. You'll find it in the show notes, and simply put podcast freebie. A member of our team will reach out to you about being a guest on the show. If you found value in today's conversation, please take a moment to rate the show 5 stars and follow us on Apple Podcasts and Spotify. It helps more people discover the conversations we're having here. To be a premium guest on the show, book a spot or join our podcast community. You'll find the links in the show notes below. And if you're looking for more personal guidance, you can book one-on-one coaching call with me. Our books, products, and courses are linked in the show notes. Thanks again for listening, and I'll see you in the